So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to the Daily Call. Today we're going to answer the question, what is proprietary trading? So if you've been looking online or if you've been searching for questions surrounding proprietary trading or prop trader, proprietary trader, etc., then this hopefully will help answer the question for you. Proprietary trading is actually very simple to understand because in many cases, if you are a regular retail investor and you're making your own decisions about where you allocate your money and how you allocate your portfolio, you're effectively already performing proprietary trading. So all proprietary trading is somebody or some firm trading their own capital for gains. So again, like I said, as a retail trader, myself, and probably you if you're listening to this, you already are a proprietary trader. You're trading your own money for your own personal capital gain benefit. This is different from somebody else trading client money for commissions. So if you think about a bank or an institution, the institution probably has two arms to it to simplify things a little bit. One arm is making transactions on behalf of clients for a commission. So they take in orders, they distribute cash, they buy shares, they sell shares, but it's all done at the direction of the client or the fund or the index or whatever they are doing. And it's done for commission. They don't gain any monetary benefit beyond just the commission for acting as the intermediary. Now, the other side of it, or the other arm, is the firm may use some of the accumulated commissions and profits that they've had to then take those profits and actively trade their own money for capital gains. They might buy a stake in a certain company, or they might, execute futures or Forex contracts or any of these other financial instruments as a means to increase their own capital gain. But again, it's the firm's own money. So you might hear oftentimes in news or in media stories online that, so-and-so firm had proprietary trading losses or gains of X amount. That's the firm's own money that they're trading, not the client money that they're trading. They're still doing whatever the clients want and gaining a commission from that, but they're not taking client money and just making these random trades all over the place for capital gain purposes. So hopefully this helps answer the distinction between these two different arms of many firms and answers the question, what is proprietary trading? So as always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.